Right, that explains why that stock is higher. Let's talk about another one which is on our radar, Navneet Education. The first management that joins us on the show, Gnanesh Gala, who's the MD of the company, joins in now to discuss more on the way ahead for the company itself. Stock's seen a bit of, an up move from the lows right now. But the important part for Navneet going forward would be whether the curriculum changes happen or not, irrespective how the performance in their, tech business, along with the stationery business pans out. Thanks a lot, Mr. Gala. Always a pleasure speaking with you. You had earlier, made a target of domestic stationery business growing at 12 to 15%, with margins in publishing close to around 30%, with 13% margins in stationery. First quarter done, academically the strongest quarter of the company. How do you see this entire year panning out? Because on the top line, there was some sort of softness, just about 1% growth that we saw in the first quarter. All right, we'll just try and repatch that connection with the management of Navneet Publications. Remember, okay, we got him back. Yes, sir, go ahead.
Yeah, so first thing I would like to clarify here is that this being a seasonal business, the best way to see the business is from October to September. So first quarter, we may have some moderate growth, but overall for the year, we are still very confident about our growth in the stationery business, and which we maintain that we'll be growing at that percentage, between 13 to 15%. With regard to curriculum change, yes, now that both the governments, Maharashtra and Gujarat, have decided to change the curriculum from next year. So this year will be quite muted growth, but from next year we are likely to see good growth for next 3 to 4 years.
Okay. When you say good growth for the next 3 to 4 years, let's narrow it down a little bit and talk about your entire fiscal, which is FY25, and then what you're expecting for the next 3 odd years. For FY24, your revenue was up around 3 odd percent, your margins were around 17%. But your profit was up over 20%. Can you replicate these kind of numbers? Are you probably aiming to do a higher revenue growth? What are you aiming for in FY25? And what might your 3-year CAGR be, given the fact that you're anticipating growth to improve?
So as I said, FY25, we are not likely to see much growth in our content business, that is publication business. But the stationery business, as I said, would grow between 13 to 15%. And therefore, overall, at a company level, we should be growing at around 10% for FY25. For FY26 and onwards, once the curriculum starts changing, the growth in publication will start for sure. Only thing that in 1 year, we may not see substantial growth. But as a CAGR, we would grow between 15 to 16% for next 3 years.
Okay. Right. And just on the margins and profitability for FY25, since you are anticipating 10% revenue growth, margins, what would they be, considering that you had challenges with paper prices in FY24?
Yeah, so overall, because the growth is very muted in publications, versus the operating expenses to go up every year based on the inflation. So as far as margins are concerned, we are again hopeful to maintain the margins as the paper prices have softened. So FY25, we would more or less maintain the margins as FY24. But once we start seeing the growth going forward, the margins should improve a bit.
All right. What about exports? You had lost business last year. There was weakness, understandably. You said that it'll come back this year. What is your prognosis here? What proportion now comes in from exports?
So overall, of the total business, export is around 35%, and which is likely to grow every year 2 to 3% more to the total revenue, because as a percentage, it will grow much faster. As far as the opportunities are concerned, we have lots and lots of inquiries from various customers that we have, particularly from the Western world. And therefore, in exports, whatever orders that we had lost, we have solved that problem. And therefore, we have regained that business. So overall, exports is likely to grow much better.
How much better?
As I said, on an average, both businesses, domestic stationery and exports in stationery, this year will be growing similar around 15%. But going forward, we are very confident that exports should grow beyond 15% for next couple of years.
Oh, okay. All right. So confident on exports. What are you envisaging in terms of a product pipeline when it comes to, say, your non-paper stationery segment? We do understand that you're evaluating various R&D within that space. Can you tell us how much are you spending? What are you evaluating? How much do you want it to probably be as a percentage of your total sales, and what is it currently?
So at present, non-paper stationery is hardly around 5 to 6% of our total revenue. If I talk about just the stationery, it would be around 4% of the total revenue. Therefore, we are developing lots of new product ranges. As a process, we always receive smaller orders at the beginning of the decision by our customers. Once they are satisfied, then they really ramp up their demand or the order. Once we see that the ramp up is happening, we have already rather planned installing capacities to manufacture such product ranges, and overall we are likely to see good growth. So if you ask me on the FY26 numbers, we may reach around 6 to 7% of our total revenue in exports from non-paper. But if we talk about 3 years down the line, that should be at least 15 to 16% of our total revenue.
All right. Just finally, before we let you go, Mr. Gala, you announced a 100 crore buyback as well. Is this from the proceeds of the sale that you had done in, Navneet Learning, or is this just in lieu of the dividend that you would pay every time? What we want to know is, because the last time you joined us, you said all the proceeds from that sale will go into funding capex of the stationery business.
Yeah, probably. So it was overdue as far as paying back to our shareholders are concerned. And added to that, we received this sum from sale of stake, and therefore board decided to give back immediately.
So with this, what is the remaining cash on your books, and are the promoters going to participate in this buyback?
Yeah, promoters are going to participate, and as with respect to cash on the books as we speak, we have 300 plus crores sitting in with us as a cash.
Okay. Any further deployment that you're thinking about?
Deployment would be major expansion in stationery over the next 3 years. So every year we would be investing between 75 to 100 crore in stationery for the stationery business. So major deployment would go there.
All right, 75 to 100 crore in stationery business. Machinery typically gets you about 300 to 400 crore of revenue. So we'll keep an eye out on growth out there as you deploy that money and bring that back in terms of asset turns as well. Always a pleasure speaking with you. Thank you so much. We will have a conversation towards the end of the next quarter as well, as that will be a good season for you too. The street likes the commentary coming in from Navneet Education. The stock was up around 1%, but now has spiked to the high point of trade as the company expects exports to grow a lot faster. All the lost revenue in exports comes back, and at the same time, they maintain their guidance on stationery and publishing business margins going forward. Take a short break, come back, get you more on the markets. Also connect with R. Jeevanandan, who is the MD HOEC, to discuss their business outlook. He joins us from the sidelines of the Motilal Oswal conference.